Okay, investors, the markets are sitting at new all time highs. We're in late September, early October, a time period I like to call the quarterly dead zone for corporate news and stock buybacks. It's that blackout time period. The end of the fiscal year end for many institutional investors, I'm going to step away from my normal data driven videos. But remember, investors, historically, the Santa Claus rally begins right around the corner in the second week of October, not in mid December. By then, I believe you're likely to hear the year end chase for performance over the next few months. In order to elicit emotional responses and retain your attention, the financial media loves to throw around a lot of catchy terms that are just easy to remember. Last week, the AI bubble talk began ramping as a theme and a talking point largely presented by individuals and strategists who almost all have been negative and missed a large part of the rally the last few quarters and maybe even the last 2 years. But hey, everyone knows that the term is scary, so it's memorable, even if these individuals have been more wrong than right for years. It got me thinking, are there a lot other catchy terms if a retail investor hears on TV, so-called experts, that they should run to or run away from? The big ones that come to mind to me is that term uninvestable. The term uninvestable as a sector or asset class has been thrown around on many occasions over the last 10 years by people in the financial media. But if you were an investor, were you better off running to those groups or running away whenever you heard that term uninvestable? Let's think back. The first time I heard that term uninvestable loudly on TV was early on in President Obama's first term. I recall back then, many were calling the healthcare sector, and more specifically, the HMO and health maintenance organizations, insurance groups, uninvestable, as Obamacare was discussed as socialization of healthcare and a government takeover. Well, what happened under President Obama to the HMO stocks in performance over the next few years? Well, they were one, if not the best performing group during his 2 terms. UNH, United Healthcare, was up almost 600% over his 8 years as president, compounding investors' money at over 27% per year. That sounds to me like one hell of a return for a uninvestable sector. Another prime example happened during Joe Biden's term as president in 2020. Recall, back then, old line fossil fuel oriented companies were dirty energy, being labeled as uninvestable as President Biden favored clean, renewable energy sources over traditional fossil fuel based investments. Conventional wisdom back then was to invest in renewable energy names over old line energy. How wrong was that call? Slow growth Exxon stock went from around $33 a share to about $122 over Biden's 4 years in office. That's a 270% gain or 38% per year. That's far from uninvestable. It also was one of the best sectors over the 4 years after that group was labeled it. You think I'm being biased and picking on Democratic presidents? Let's think about President Trump's term. What group was supposed to be uninvestable under him? Clean energy and renewables. What country was also supposed to be uninvestable? Yes. Yep. China. How did those two uninvestable areas do? Well, since Trump 2.0 started, the clean energy ETF is up almost 30% in 9 months, compounding at over 35% per year. In August 2023, the U.S. Commerce Secretary called China uninvestable. Since then, the poster child for investing in China, Alibaba, is up over 115%, cumulative compounding at over 45% per year. Call back after President Trump was elected in November. Many strategists in the media were calling alternative and clean energy that dreaded word, which should draw investors toward it, not running away from it. That word, yep, uninvestable. Behold, while the traditional energy sector has been a laggard year to date, these more speculative names, dare I say, uninvestable cleaner energy in the areas of solar, uranium, and nuclear sub-industries are some of the highest returning groups and sectors year to date. Okay, Chris, so if we hear that word uninvestable, maybe we run to the group and do some research, not run away from it out of fear-mongering. Any other words to key on looking forward as we're listening and watching TV? Yep, lately I've heard a whole lot of these words and phrases in the financial press. And they're all words of warning and danger to me. Here's a short list that gets me suspicious. The words or terms are this: the fact is, or honestly speaking, or in reality, or this time it's different. Lately, almost many commentators say the fact is, when in fact, what follows out of their mouths aren't facts based on numbers, but opinions. Same thing gets me going when people say honestly. When I hear that word, I honestly think, so great. You've been lying to me all the other times we're talking. So I tend to run away from investment ideas or people using those terms way too much. Investors, that's it for the week. Some fuzzy advice from me as opposed to my usual database videos. So the next time you hear that term, uninvestable in financial press, stop for a few days and do your own research. You might discover or heard a prime investment opportunity that the herd is ignoring or running away from just as you should be running toward them. For those investors who didn't panic and think the world was uninvestable in April during the tariff tantrum and who stuck with their financial plan, congratulations. Know that regardless of the path for the economy and the financial markets over the next few months, the investment team at Oak Harvest will be here, manning the ship and searching out both investable and those supposedly uninvestable areas for Oak Harvest clients. Until next week, have a blessed weekend and know that the Oak Harvest team is doing what we can to plan for you and your family's future, regardless of what stage you're at in your career or in your retirement.